Welcome to the Len Guillot Podcast, a podcast about life, leadership, and money matters. Our guest today is Susan Laubach. Susan is a former Wall Street stockbroker and a financial educator. She has taught several levels of investments to students aged 18 to 74. She has written 9 books, and today we will speak about her latest book, Rumpelstiltskin's Rule for Making Your Farthings Grow, where she uses fairy tales to teach personal finance. Susan, thank you so much for joining us today.
My pleasure, believe me.
So, Susan, I was looking through your bio, and you have so many things. You have done so many things in your life, from being a stockbroker to being into acting to writing 9 books, and you are the mother of I forgot how many children? 6 children.
I have two sets of twins and one in between, so that makes 5 children.
Okay, 5 children. So busy, busy life. I wonder if we could start by there. First of all, what is it that drove you towards personal finance, and then a little bit about your career in Wall Street?
Sure. Well, what drove me was the need to make more money than I was making in the theater. I was a professional, but equity pay is very low. So I have 5 children, and in the very near future, at that point, they were going to go to college. And a friend directed me to a very fine firm in Baltimore, was where I was living. So I was hired, and at that point I had to, because I'd been a theater person most of my life, I had to learn about the stock market. I knew, Adam, I didn't know the difference between a stock and a bond. So
Many
yes,
people
so
still don't know the difference.
I know. That's why I explain it in my book, because I remember the learning process, and I remember the points at which I was stymied. So over the years, when I've been teaching, I've tried to use stories, and that's why I chose this way in which to tell the stories to people, so they'll remember them.
Okay,
That's
well, there's I guess there is the first lesson right there. You saw your situation, you saw that you were not making enough money, and you decided to pivot, to do a career change, and to look for something that could sustain you. Now, I find that many people are stuck in the same situation. They are in difficult financial situations, and they don't think about changing, pivoting their life in a way that could be more profitable for them. And then it comes the whole thing of blaming the system, blaming circumstances, blaming my parents, blaming my neighborhood, blaming my neighbor, whatever. And I wonder if you could tell us how to change that mindset, that I shouldn't be a victim of my circumstances. I can always change route, study something else, go where the money is.
Oh, you're so right, that people are so reluctant to make a big change. I was a manager for the firm as well. And my contention was that I wanted to find a woman who was desperate, who was absolutely desperate, and then convince her that she or he, and I did this many times, Adam, convince them that they had the ability to understand this business and therefore to make a lot of money. But not just make a lot of money, which you do, but it's constant learning. It's a challenge to learn all the new steps and ways to make money within the investment community. And it's fun. You meet new people. You have a good time, and it was the most enjoyable career I could imagine anybody could have.
Well, I'm asking this question because I run into this quite often as a person who would like to promote investments, personal finance, and I'm running into the wall of making capitalism evil. You know, it's just like, oh, you make money in the stock market. You buy stocks in Walmart. Walmart abuses people, or no matter, you buy
I'm hearing
petroleum from the petroleum company. That's destroying the planet, and this making
this.
things
This is.
evil.
I know this is currently a problem because people don't understand that Wall Street, the stock market, companies, those are the engines that make the countries grow, yours and mine. Those are the engines. And they're not to be feared. They're not to be castigated. If they don't go, we don't go. And if you don't like the energy business, don't invest in it, or invest in a portion of it that you do like solar energy, perhaps.
Or don't consume it.
Well, the problem is that you have to, in a sense, consume energy in one way or the other, particularly where you live, Adam. So it either don't invest in it at all, or learn what it is that is for our green tomorrow. What's going to work tomorrow? That might not be making a lot of money now, but if you can get in now, if you're a young person, you've got a lot of years ahead, go ahead and protest oil. Go ahead and protest it by buying something that's a renewable energy. Make your statement that way.
Right.
And if you don't like Walmart, and a lot of people don't, and it's a very cursory look at Walmart. If you go into Walmart site, or you go into any research thing about it, you'll find out the good they do. And then you'll find out how people in rural areas are able to buy things, have them delivered at a considerably lower cost. So if that doesn't fit your value system after you've done your research, move on. Do you like healthcare? I hope so. Do you like the people who supply to the healthcare industry? A good way to invest. Invest in any industry. I'm not regulatory requirements say I can't really, I can't tell you what to buy, but I can tell you that any industry that sparks your interest and that you think is worthy of staying with over the years, look at who supplies them.
Right.
And that's a way to go. But to just say no to the stock market is saying no to the only real way you can get rich, at least in this country. It's the only real way.
And it's not the only way that you can get rich. I mean, these companies, this capitalism whole structure is taking millions of people out of poverty every day. And
Yes.
it seems like the only thing that we get to see is that Jeff Bezos is making a lot of money. Yes,
Exactly.
he's making a lot of money, but millions and millions of people in everywhere in the world, in China, India, Indonesia, Singapore, whatever,
Yes.
people are being lifted out of poverty.
Yes, you are absolutely right. So if you have any interest in doing good, don't throw away the opportunity to do it through the stock market.
Exactly. Okay, well, now you had a very unique idea. In fact, I must tell you, this is the first time that I ever see this in my years of reading personal finance book, which is to mix fairy tales with personal finance. And I know that it must come from maybe your years in theater, but can you tell us how this idea came about?
I was trying to think of something that I could make funny, make people laugh, or at least smile, and also embed that little rule into their heads. Now, when I say rule, as you know, because you're looking at the book, this is the way in which I impart something that I consider extremely important to know. Before you invest, or even while you're investing, particularly if you're a young guy, you're just out of college, you're just making money for the first time in your life, and you decide you want to go invest. out in the western part of your country, when I used to go out there on business, there are a lot of penny stocks. No, 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 no. That is not investing.
But
So
but
no, 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 no. Invest in real companies, real companies. And you mentioned before that you didn't weren't familiar with Rumpelstiltskin, which I know a lot of people aren't. So when I teach this, I ask the teachers to tell the kids to read these stories ahead. The stories involved are Goldilocks and the Three Bears, and then you've got the Three Pigs, and then you've got the Turtle in the Hare. You've got a Sleeping Beauty and the Emperor's New Clothes. You can only guess what that kind of rule is. And then finally, you've got Rumpelstiltskin's story. So if people are not familiar with those stories, they can find them on YouTube or in the library, in the
they're very
children's
short. They're
department
very
of the
short to read. Yes.
library. Yeah. So, but you asked how I got the idea. It was just in trying to find something that I could make funny.
Okay, great. Okay, for a moment ago, you mentioned don't buy penny stocks, and this is a conversation that I had a few times with friends of mine who are beginning to get interested in investing, and I heard this phrase so often: "I'm going to buy shares of these stocks because their shares are only 50 cents, as opposed to that other company that have shares that are $5,000. And of course, you and I know that a share of 50 cents could be expensive, and the one that costs $5,000 could be cheap. I wonder, I mean, not to get too technical, but yes, tell us how is that possible, that a 50-cent share could be expensive and a $5,000 share could be cheap?
Of course, to buy a 50-cent share, you got to buy a whole lot of them. And it's often likely, I hate to say this, it's often likely that it's not based on a real growing company. It isn't. In fact, I would look at it this way: to tell those people that's another business, that's something else, that's not investing, that's not engaging in the engine that grows this country. And so if you want to do that, go ahead, do it. You'll probably lose money, but go ahead and do it, and learn what not to do. But don't put real money in that.
Right.
Real money should go in a company or a mutual fund or an ETF. I love ETFs, which are based on solid industries, not flakiness. The other thing is, I'm sure you get people who want to trade. They want to flip the stock. Because that's not investing either. If you buy a company, you don't want to walk in the door one day, walk out the door the next, and think, okay, I've done it. I'm conservative enough where I think you ought to buy things that you are seriously interested in investing in, and then watching them grow.
Well, Susan, honestly, I believe that there is real value on all the tips that you are sharing with us in the book. At the same time, I think there is a real value also on learning what not to do the hard way, because I mean, you and I could share these principles and ideas until we turn blue, and people just, their information goes in one ear and comes out in the other ear, and they see, oh, but the marijuana stocks, they went up 1,000% last year. I'm gonna get me some of that, or I'm gonna get me some of the new cryptos coming up that are only 1 cent right now. And until they lose some of their hard-earned cash, then the ideas that you are sharing, sometimes they don't sink in. I feel like
that's right,
losing money is part of the learning process. Oh crap, I lost $1,000. Now let me go back and read Susan's book, and maybe I can learn how to do it correctly.
Now I'm ready to invest. Yeah. And if somebody has like throwaway money, I don't know what's throwaway money, but they got something unexpected. Go ahead and buy some of those crappy things. That's, but set aside real money, buy 10 shares of something, you know? I mean, for my kids, I started out when they were born, not when they were born, but when their kids were born, buying 10 shares of something or buying $500 worth of a good mutual fund. And then you're a participant and you are much more invested in learning.
Right, right.
And it's much more rewarding in the
Yeah,
long run.
yeah. Well, I had to tell you, unfortunately, I'm the kind of person who learn by losing, by losing a lot. Not only losing money, but losing my time and energy. But I don't know, because at the end of the day, I learned my lesson. I guess my interest was still intact, that I learned some classical ways or some more proper ways to invest and see the long-term uh, possibilities of earning money slow. You have a chapter called Slow and Steady, something like that. Can you tell us a
It's
little bit
slow
about
and
that?
steady wins the race.
Right, right.
The Aesop's fable about the turtle and the hare. And I put it into a funny story. The point being that you've got to get started and keep going. And that's where slow but steady wins the race, because you've got to, in my opinion, in order to win the race, you need to be investing in companies whose earnings are not splashy necessarily. Maybe they'll splash for, one particular part of their business for a little while, but the underlying ongoing business is the one that steadily grows its earnings year after year. Steadily growing its earnings, meaning exactly steadily growing its stock price. That's why stocks go up. That's solid growth. That's not flaky overnight stuff.
Right.
Uh, yeah,
Another way to see a slow and steady is also the way as we investors invest in the stock market, which means it could means putting, I don't know, 5% of our
yeah,
earnings every year or every month, whatever it is, but slow and steady. Not to think, oh, I'm gonna put my life savings today and everything's gonna be rosy tomorrow.
that's right. And I'm going to put it in today, and then January 1st, I'm going to sell everything. Why did you put it in to begin with? I mean, what's the point? So this is a wonderful world to live in. I mean, the investment world. It's a wonderful, exciting, always challenging, always interesting world to live in. And I can't recommend it enough for lifelong learning, for one thing, but also for that idea that you just pointed out so wisely. Take 5%, 2%, 1%, take something, put it in, watch it, put it in again, watch it, and it will be fun. And
Right, right.
so, I mean, the idea being that, let's see, you're in Montreal. There are so many wonderful ways. And of course, I would probably consider cross-listing. In other words, buying on the New York Stock Exchange for various reasons. But you can look around, or you can read around, or look on TV or whatever, and see what industries you are particularly interested in. Maybe your brother works for them, or you just got really excited after reading an article about them. And then go and get started and live with that industry.
Right. Another thing that I tell some of my friends is that many say, "Oh, but I don't have any money to invest. I'm gonna wait until I'm 40 or 50 when I put some money, and then I will put some real money." And I tell them, "Look, even if you just put $25 per month, at least you create that habit And
Oh,
then once the habit is developed, then anytime there is a new opportunity, let's say, I don't know, you get a gift for Christmas or something,
exactly.
then the habit is there. You can go ahead and put a little bit extra that month.
And so smart, because the time to start, if you can, is when you're young. When you're young, because first of all, you can afford to lose. You don't have to worry about uh, taking great losses because you've got what 60 years ahead of you. But if you invest when you're young and watch it grow, it's magical. By the time you're 40, you'll really have some money. And people, if they do, as you well know, you can borrow against your portfolio of stocks at much less cost than borrowing money from the bank. You can borrow against your portfolio to buy a house, to pay tuition, whatever comes up when you're 40 years old.
That's okay. So oh, you just mentioned a minute ago that you also like ETF. So until now you have spoken about industry, about particular stock. Can you tell us what's your view in regards to investing in ETF, and just define ETF as well for us?
Exchange traded funds. And I've been interested in them since they first came out. Oh, a lot of years ago now. One was offered by Barclays, and it was especially attractive to institutions, which were my customers at the time, because at the time when they were first structured, there were certain things that were very attractive to the institutional market. They were so well structured and such a wonderful idea that obviously other people picked up the idea, and now there are what, hundreds, thousands, I don't know, but ETFs are a way for an individual to buy into an industry that they're interested in, he or she is interested in, because an ETF is a basket of stocks. It's a basket of companies in that particular industry. So you don't have to pick out one company and live with it. You like the industry, so buy the ETF. And it's now even segmented into much smaller and smaller focuses. So if you look at your particular focus of interest and buy the ETF, the advantage over mutual funds is that you buy them during the day, what we call real time. You don't have to wait until the market closes to take whatever price it is on the close. You can buy your ETF during the day. There's no management fee because there's no management. And so you have to pay a broker's commission.
Right.
You buy through a broker. But that way, if you've read some good news, the earnings are coming out, it's just, everything's rosy, you buy it in the morning. If you were wanted to buy a mutual fund, it wouldn't be priced until 4 p.m. And by that time, it might have gone up, $10 a share. Who knows?
Right. Well, at the end of the day, that shouldn't be a big topic of concern when you are thinking of investing for the next 10, 20,
Oh,
30
that's
years.
right.
But the importance of that is that is rule number 7 on making your farthings grow, so, which is diversification.
That's diversification is absolutely right. To make sure that you have a balanced portfolio, build it up. You're not going to do it overnight, but you build it up. And by buying the things that I talk about in this book, the bonds, the fixed income, plus the stocks, growth stocks, meaning growth in earnings per share, you have a balanced portfolio to take advantage of times when stocks aren't growing, bonds will still pay interest. When the interest on bonds low, not going to keep you in groceries. The stocks could be going up. So what I'm saying is you want to be able to take advantage of any kind of economy through a balanced portfolio so that you don't have to keep buying and selling, which is very expensive.
Right, right. One more lesson from your rules is to keep our expectations in check. I mean, not because I don't know, marijuana stocks went up 1,000% this year. That that's oh,
Oh,
if
yeah.
marijuana stocks went up 1,000%, I'm happy with 500% for next year.
Well, that you're so right, because when I was actively in the business, people would say, "Well, last year the S&P went up 26%. Now, I'm sure it's going to do that this year." No, no. When they say that, they're saying the S&P on one day, one time was up 26%. It may have gone down to 10% the next day, but don't look at that. Look for what you consider to be reasonable. And anybody who is advising you would say, listen, if you get 5 to 10% on an annual basis after tax, man, you're going to be a rich person. 5 to 10% is really optimistic. I'm talking over time. If you can get 5% a year over time, now that sounds to a lot of people like absolutely nothing, but it's not true. The magic of compound interest, I mean, you keep getting that 5% over the 5% you got yesterday, over the 5% you got the day before. You keep getting that 5%. And believe me, you will be happy. But manage your expectations. For example, don't expect to get growth out of a fixed income security. It's going to give you an income that's fixed. Don't expect to get income out of a growth security. You didn't buy it for that. Now, it's very possible your solid company is paying you a nice dividend, which probably, because the company's solid, increases every year. But that's not why you're buying it. You're buying it for the growth in earnings per share. And keep that in mind before you say, I'm so mad at this stock. It's not paying me enough. Or I hate this bond. It's only giving me 3%. But it will pay back all the money you put in at a certain point in the future.
Okay, well, this may be the most difficult question. How does an educator like you, who is trying to teach something as uncommon as common sense, can fight against the Bloombergs of the world that are telling you every day, buy this and sell that, and always the stickers and all these green and red arrows going all over the place.
Crazy. It drives me nuts. And that guy who yells at you on TV, it drives me crazy. Well, I think that when I was in the business, we always listened to research analysts who came up with, such and such a company, particularly up in Canada. There were some really nice companies that we invested in. Your banks were very strong then. I hope they still are.
We have a monopoly. How can they not be strong?
But I mean, conservatively speaking, they're not going to go out of business. But the fact is that these programs are playing into the person's need to do something. And when you really invest, you don't have to do anything. You may be looking at them to get confirmation of what you already own, or you may be looking at them to think about buying something as a gift for your child, or your grandchild, but only as a point of interest, not as an instruction to do something.
Right. Okay. Well, Susan, there are so many lessons here embedded in these fairy tales that you share with us. I wonder if you could share with us one more time the title of the book and where can the listeners follow the work that you do?
Oh, absolutely. The title of the book is Rumpelstiltskin's Rules for Making Your Farthings Grow. It's available on Amazon, on Kindle, and I also recorded it for Audible.
Really? You recorded it yourself?
I did.
Wow. Okay. I have an Audible account. I'm going to check it out.
Oh, wonderful. Thank you so much.
Thank you, Susan. Bye.